Fund is now preparing to challenge the OSC's decision. Howard Atkinson, chairman at 3iQ, joins us for more details. Thanks so much for being with us.
Good morning, Amber.
So you've been championing this Bitcoin fund for some time. Before we get into the nitty-gritty and the spat with the OSC, maybe just talk to us about the structure of the fund and what it is exactly you're trying to launch.
Yeah, we've been at it for over 2 years. We filed our first prospectus in April of 2017, and what we're simply trying to do is issue a fund that trades on the Toronto Stock Exchange and is available to retail investors and gives you exposure to Bitcoin. And that's vaulted Bitcoin at a custodian as opposed to futures.
Now, why do that? Why couldn't a person just buy Bitcoin through an exchange and hold the actual asset?
Many Canadians are. In fact, approximately 5% of Canadians have purchased Bitcoin in one time or another. That's 1.5 million. The problem, Amber, is that they're doing it through ATMs, unregulated sources, foreign listed securities, RTOs or reverse takeover entities, and these are unregulated at best. Some of them are insecure. I need to say no more than Quadriga when that comes to mind. And in many cases, they're very expensive. So what we're proposing to do is launch a fund that will be secure, it'll be low cost, and it'll be convenient. It'll be available to Canadians in their regular and registered accounts like RSPs and TFSAs.
So it would be like an ETF that tracks the price of Bitcoin.
Similar, it would be listed on the exchange, but in this case, we're opting for a closed-end fund structure. And the reason for that is it limits the amount of funds going in and out, and it better enables us to control the sources of Bitcoin. And we're only going to deal with regulated exchanges. They happen to be in the U.S., the likes of Gemini, Zappo, and Circle. There's 8 unregulated exchanges in Canada, and we're not currently dealing with any of those.
So take us into the OSC's key opposition, why they choose not to bring you into their regulatory umbrella.
Right. So when the OSC director rejected our fund, they really cited custody, auditing, and not in the public interest. And the public interest issues revolve around liquidity, valuation, and trading. So if we start with custody, we do have a custodian that qualifies under the current legislation. So we've kind of ticked that box. On the auditing side, we found an auditing firm that will audit the fund as well.
Was that difficult to do?
Both of those were very difficult to do. We had many stop and goes with different providers. On the softer issues, public interest issues, the first one, liquidity, we're a little perplexed at because Bitcoin trades about $800 million US a day. Put that in perspective, TD and Royal Bank, the 2 most frequently traded securities on the TSX, are less than half of that. Right, so we think Bitcoin's got lots of liquidity. On the valuation,
were they talking about Bitcoin liquidity, or were they talking about the liquidity of your fund, the ability to get it?
No, they're talking about the underlying liquidity of Bitcoin. Of course, ours will trade on the Toronto Stock Exchange when the market's open, and you can trade, in and out, no problem. On the valuation side, we're using MVIS Index Solutions. They're a Van Eck Fund subsidiary in the U.S. They currently run over 100 indexes. A quarter of those are in the digital asset space, and they have about 13 billion of assets linked to those indexes. So we can get they pull 70 exchanges continuously around the world and update the Bitcoin price every 15 seconds. So we feel we can value it. And the last one is just on trading. I mentioned already, we're only using BitLicense regulated exchanges.
So I guess let's underline why you want to do this approach, because there are other ways to get a Bitcoin fund to market. You mentioned you could just buy a cashed up shell and say you're a holding company, and as part of your investing thesis is you can put all the assets into Bitcoin and I can buy your company that way. But you seem to really want to go down this fund path.
Right.
Why?
So, we went through the front door of the regulator, and that's why it's taken a little bit longer, but we think that's the right path. It's more sustainable. I think doing it via an RTO route has its problems. You're going to have trouble raising more money going forward. We're in this for the long term. We think this is an asset class that Canadians with any sort of risk tolerance to alternative investments should have an allocation greater to 0 in this space. And by making it a listed fund that's closed-end, it can grow with the appetite of investors over time.
So the price of Bitcoin is down 80% from its most recent peak. When you started this journey 2 years ago, it was a rocketing upward momentum away from these issues with the OSC. I mean, do you really believe fundamentally that this is an asset class that's got legs, that it wasn't just a fad that took people's attention towards the end of 2017 and broke their hearts in 2018?
Well, Bitcoin's been around now for over 10 years. It's been vetted by thousands of computer scientists and cryptographers and programmers. It's had 3 sort of crashes like this before. It's come back every time. The users are growing. There's 32 million wallets globally. About a quarter of those are active. I mean, Coinbase in the U.S. has 13 million users buying itself. And the fact that 2 individuals that can do a transaction between them on a trustless, almost costless basis is very, very powerful. And I'll use the remittance market as an example. Global remittances are about $60 billion US annually, and the average fee incurred is 9%. So by eliminating the middleman there, you've saved about $5 billion US just on that case use alone.
I guess what I'm trying to understand is, given the stunning price collapse and the uphill battle that you're facing just to get this, regulated, you come from the ETF business, which was doing pretty well at Horizons. I guess my question is why bother? Why is this such a significant asset class for you and worth this kind of fight?
Right. Well, we didn't know it was going to be this difficult starting out, but we're persistent. And I remember back to the early ETF days. I started in the late 1990s and 2000 when there was one ETF in Canada. Everyone thought it was a fad and it was going to go away, but I saw it as a disruptive technology that was going to change, investment management, and it certainly has done that. This technology, blockchain technology, is going to transform most industries that we know. It's going to be a lot bigger than ETFs because it's going to be outside of investment management. It's going to go beyond those borders. We're taking the investment management approach so that regular Canadians can get access to this asset on a convenient, low-cost, secure basis. So it's worth the fight.
Howard, thank you so much for joining us.
Always a pleasure, Amber.
Howard Atkinson, Chairman at